This is one. There we go. Hey, I'm Jody Ellis from Investor Centre, and we're just doing another live session on behavioural mechanics, mass market psychology, and today we're going to talk a little bit about the China A50. We're also going to debrief on all the previous videos that we had where I had trades going in the marketplace. So that's been a very lucrative time for us. Anybody following those trades has had a pretty good run. So I'm the CEO of Investor Centre, and I've got a bit of a history there. I've got no retail clients. I'm an active trader, and this is a no advice session. So it's general information only. It may not be appropriate for you to do these trades, and you should seek advice before seeking a position in the marketplace. There's no warranty or guarantee by Investor Centre. And the following guide represents actions that I take in the marketplace myself, and so wins and losses are real. In viewing this presentation, you accept full responsibility for any action that you take resulting from the information presented. So congratulations to everybody who did the last 6 trades. We're 6 for 6 on that. We've got the S&P 500 long still outstanding. The gold trade about to wind up if you haven't already wound it up, and that will finish tonight. And then we're about to embark on the big adventure, the Chinese A50 index. Okay, so we'll just debrief the short S&P 500 into the election run. We've got the election results coming through as I speak now, and I've got to say, I'm completely confused. They're saying Biden's leading on numbers, and then you go for seats and you see Biden's leading on seats, and then they say Trump's actually leading the race. So it's very interesting. I have no clever understanding of how they actually catch votes, and they talk about seats, etc., and representatives for the president in certain areas. Got no idea. Now, S&P 500 election run has been sensational. S&P 500 Australia 200 inversions. There were 3 inversions, 3 victories there. The gold trade that kicked off last Friday, that's been sensational. And the Melbourne Cup trade, of course, another great victory. And so now we're 38 years, 2 losses and 36 wins. We'll never get back to that 100%, but it's still not bad statistics. For the S&P 500, I went short from 34.50 and I exited early. I reversed the position at 3,300. Anyone who took the short and ran that down could have gone all the way down to about 32.60. And I think if you were really on the ball, it touched 32.50 there for about 1 minute. But I reversed my position and took an early 3,300 long. When I last spoke about it, I wasn't even sure that we were going to get to 3,300. So I'm completely happy as we stand here. Look, it's been probably 30 minutes since I've seen the market, but it was up over 100 points from 3,300. On the S&P, it was trading at about 34.20, so that's 120 points. I was expecting that trade, the long trade, to come back over the space of the next 3 weeks, but it could be the next 3 hours the way it's been going. Okay, and that's why we had to take the early position on that. We had to reverse our position before the election because getting on it is going to be, picking that moment would be very hard. So the total profit for the short was 150 points of S&P 500. One point is worth $1 and depends on how many contracts you have. So if you had 1 contract, you would have put exposed $1 and I made $150 from that, which is the equivalent of 210 Aussie dollars. So if you traded 10 $1 contracts, you would have made $2,100 Oz for that trade. A great outcome. The inversion trade number 1, right? It was where we were long the strong and short the weak. Now, coming into the US election, the US market is weak. Now it's turned into a strong market. The Australian market was resistant to falls, so we could go long. Got to get the camera right here. Okay, so long the Australian market because it was resistant to going down. And we go short the S&P 500 because due to people's behaviour, fear, uncertainty and doubt, they were more inclined to sell before the election than buy. So the disposition of the US market was down. The disposition of the Australian market was to resist that. Not necessarily go up, but to resist that down. And the arbitrage between the two markets, the strong and the weak, would give us a profit. So on the first night, on the Tuesday night, we did long on the Australia 200, and our entry there was 61.60, and then we exited at 10 a.m. the following day at 61.05, and so we lost $275. The S&P 500, we went short on the S&P 500 at the close of market there on the Australian, and we went short at 34.35. And we came out the following morning at 10 a.m. at 34.05, so we made 30 points of S&P, and we had a 2-to-1 ratio. So if we did it with 5 Australian contracts, we had 10 US contracts, so we made $300 US, which equates to $420 Australian. We literally had an insured position. Now, it's not unbeatable. Obviously, if we make money, we can lose money. And we talked before about risk reward. There's no risk rewards that I've found. But this was pretty much a covered position at this time of year. In these circumstances, that was very, very unlikely to lose money and highly likely we would make money. And so the net for that, on that 10 contract, 5 contract play, was $145 Oz. So that was a perfect play for a $10,000 account, and you made about 1.5% from that. Nothing exciting, but a bit of pocket money. Inversion Trade 2 got a bit more exciting. Okay, and this is what we were looking for in this play. We went short on the US and long on the Australian. At 4:30 on the Wednesday afternoon, we got into the S&P 500 at 33.80, and we came out at 10 a.m. the next morning, 32.88. So we made 92 points of S&P on the down leg. The Australian market, we got long at 59.60 at 4:30 on the Wednesday. And then we came out on Thursday morning at 60.40, and then we came out at 59.60. So we lost 80 points on the Australian market. We convert that all to Aussie dollars, and we made $1,295 from the US market, and we lost $400 on the Australian market. We netted $895. Now, as I said, anytime you happen to get up during the night and do a sneaky peek and you've got 10% profit, your City Index AT Pro account will give you your total profit and loss statement in Aussie dollars up the top of your screen. And at any time you're trading with a $10,000 account, and at any time that exceeded $1,000, you could close both positions and net that profit. Because 10% overnight on a covered trade, what we call an insured trade, is good profit indeed. Now, for about an hour and a half, from about 3 a.m. to about 4:30 a.m. in the morning, this was over 10%. So it actually went and normalized itself towards 10 o'clock as both markets closed into the Australian market closed its night market, the American market opened its night market, and we lost a little bit of profit there. And you could have actually netted at one stage about $1,300 Australian from the two trades. That's a big inversion trade, and that was the one we were looking for. We don't know precisely when it's coming up. It came up on the Thursday. Then the Thursday night, we got long on the Australia 200 at 59.60, 59.40, and we got short on the US market at 33.10, and the US market on Friday morning was trading at 32.85 when we closed it out, so we made 25 points there. Now, the Australian market at 10 o'clock was trading at 59.60. It actually went up, and so we made a positive amount on that one as well, and that netted us a total of $477 on a $10,000 account with technically no exposure, or we can't say no exposure, with low risk, with a low risk exposure. So highly successful. That's 3 inversion trades, 3 victories. It's all, we can't do those now because the American market is strong and the Australian market is fairly strong as well. It's hard to differentiate. We're just going to have to let things go. We can't do these inversion trades all the time, but there's some key times like around June 30 into July 4 is a great time. Over the Christmas New Year period and the end of the US tax time, another great time. And the US elections set themselves up perfectly. September is also a good month. These are specific times of the year when one market is strong and one market is weak. Okay, the total net is for the 3 inversion trades in an insured position is $1,517, or if we call it 15% on a $10,000 account for 3 nights in a low risk environment. So this is not a win-lose scenario like when we're trading. When I went short on the S&P 500, something happened, I would lose money. In this environment, it's difficult to lose a significant amount of money. It's not impossible, but we're trading the behavior of people, and the Australian market is bored with the US election, but the American market is all about the US election. And if you think about it, if you're in the US and you're coming up to the election, you want to see if Biden wins, you want to see if Trump wins, you want to see if there's dramas, you're not going to buy very much, but you might be motivated to sell. Sellers overpower buyers and the US market goes down. It's a simple equation of people behavior, right? Will it be there for the next US election? Absolutely. We can do this all over again in another 4 years' time. The gold trade. Now, the gold trade is a great trade across the US because it fades into the US election, and so where I was actually short on gold back from 1930 and then ran that back down, but that was before we started this trade here. And this trade we went long on Friday afternoon at 18.75. The market's been to 19.10 this morning. Our target is 19.25, right? $50 above. Now the Chinese, I can't say that. Sorry, someone dropped more than 1 metric ton of gold for sale in the space of a few minutes at 12 o'clock today, and spiked the gold market down nearly $30. Now, we've seen that before, and China has been traditionally responsible for that by dropping gold on the Japanese, gold bullion on the Japanese market. In fact, we saw a few years ago the gold price fell more than $75 in less than 30 minutes when someone dropped 3 metric tons of gold for sale at market. And we saw a spike down again today. We believe it was about 1 metric ton right at 12 o'clock. Just a spike down in the marketplace, but didn't really affect us because our stock was well away from that. Our target, 19.25. Now that trade officially closes at 12 a.m. tonight with the open of New York stock market, very close to that. We've divided our account balance by 2,000. So if you had $10,000, you would have 5 gold contracts in US dollars. Now, anybody who moved their stock up to close to the entry price would have been spiked out in that today, and the potential is there for the market to still reach 1925, but we really don't want to be hanging around too long on this one. And so the market, if you got in at 1875 and the market's trading at about 1900 now, which was about half an hour ago, you go, that's a good profit on gold, and there's no problem in taking that. We're hanging around for the last spike, but we're going to see a lot of interesting things occur over the next 72 hours with gold, with the US market, with China, with Japan. It's topsy-turvy time, right? So no problem to quit with a win, and that's been very lucrative trade. The Melbourne Cup trade. Okay, so this year Tigers entered on the Friday for the first leg and took out 70 points in the market from across the weekend. Now, they had an opportunity to do the alternate entry on the Monday and took another 40 points from that. So Tigers did very well with this and never even participated in the Melbourne Cup trade as such. We went long yesterday on the day and we managed to pull about 80 points out of the marketplace for the day, which was good. But from the Tigers' point of view, your all targets were met. 25 points, 40 points, 70 points, and you had the alternate trade, which also delivered 40 points there. We didn't have a recommendation of 70 points on the alternate trade. So for the public trade that we discussed, where you entered on Monday at 1:30, 25, 40 and 70 all met. And of course, if you'd gone for 140 in this particular instance, you pretty much got your 140 as well. It's been a huge Melbourne Cup, but once again, a victory is a victory. And even I've spoken to a couple of people who went for 25 points, obviously disappointed with their outcome, but a win is a win. And if you have a look back, grab your charting package. IC Investor has history on the Melbourne Cup going back a long, long way, and it is an extraordinary trade. As I said, has been defeated twice. We don't have that. I used to be able to stand up in an audience and say, has never been defeated. The Melbourne Cup has been defeated, but no stops have ever been hit, and your losses when in those two times were very, very small. Your victories quite often, as per yesterday, very, very big. Best bet on Melbourne Cup. I was just got to complain about that. Bit disappointed. Did the box trifecta yesterday and got second, third and fourth. So a bit of fun. The S&P long trade. Now, as I said, I'm long from 3,300, and it's got here. It shows you how quickly it moved. And I did an adjustment on that at about 12 o'clock today at 33.65. But this afternoon, I was looking at it trading at 34.40. It's come back a bit from 34.40. Who knows where it is at the moment. I'm expecting it to go all the way back through to 3,500 points. There's nothing wrong with taking a profit early. 33 to 34.50 is another 150 S&P points. That's a lot. That's a lot in an index trade in a couple of days. And remember, with the S&P 500, we're trading in US dollars. We're not trading in Aussie dollars. So the S&P 500, I've allowed for another 2 weeks, depending on the election outcome, but it's starting to look like we could be out in hours on this trade. The problem with this trade and why I did the stop and reverse on my short trade was because we can't tell when the market's actually going to take off. And if you go, oh, wait till the election's over, the market could be at 3,500 tonight and they declare an election win tomorrow. We've missed the majority of the trade. Hence, we're long from 3,300. Now, the trade is near the end when the loser admits defeat in the election, not when a winner claims victory, because I have a feeling that Biden and Trump are going to stand up in the next 24 hours and say, big victory, okay? what we want is for Biden to say, okay, I'm not pursuing this anymore, or Trump to stand up and say, I'm not pursuing this anymore. And for Biden, if he feels he's lost, he could declare fairly quickly. For Trump, they're really expecting him to go kicking and screaming. So I saw a report yesterday that the White House security is prepared to physically remove him if they have to. Now, China here is waiting for an outcome. We can see the long-term growth line on China, very strong. We've got this is a frame from the other day. This is a frame from when we're talking about the markets in general. This is important. This spike here was the 90-year celebration of the Chinese Communist Party, and they inserted $3 trillion US into government-owned equities in China. We've seen a lot of things happen and a lot of developments happen in the last 2 weeks with China, and we just saw the biggest listing in the world get canned by the Chinese. Gosh, slips my mind just now, but that got canned this morning, and it was due to list in 2 days, and the listing is not going ahead. So that shows there is turmoil over in the US, in China, and the Chinese government starting to show significant amount of confidence in aggressive moves. Now, we've got the Australian Quad military exercise infuriates China, and they're not annoyed about it in a little manner. There's a couple of quotes here, and Morrison's defence strategy sounds like war talk. That's because it is. That's the link to the ABC News, and it's worthwhile having a read of that because everybody is starting to arc up in the South China Sea. Now, we are participating in the Quad exercises with USA, Japan and India for the first time in 15 years, and that is a military exercise in the South China Sea for a freedom of navigation exercise. We've had a couple of other blow-ups. Taiwan had Federation Day the other day, and in protest, China flew 40 combat aircraft, penetrated Taiwan airspace, went right to the coast of Taiwan and turned around and came back. Just as a, by the way, you don't have a federation. It's interesting reading about what happened with Fiji. The Taiwanese consulate in Fiji had a Federation Day function, and the Chinese diplomats came in, and there was apparently a punch-up, and they were removed forcibly by the police, etc., etc. There's a lot going on. Taiwan is a hot seat. The American Senate is rushing through arms purchases by Taiwan, which of course have infuriated China. Why would a state of China be buying arms from America? And in that, they've got a lot of beach assault weapons, beach mines, etc. Now, this is a good one. China prepares to invade Taiwan. That's the CNN article, worth a bit of a read, where Xi Jinping rolled into Fujian Province, and at the naval base there gave a big speech for everybody to prepare for war. And while the US election is on, it is a concern because we can see on the map there not a great deal of distance between mainland China and Taiwan, and Americans are saying that they'll defend Taiwan. They've been requested by Taiwan to defend them. They'll defend Taiwan against China should there be a military issue. However, China jumps in a few boats, sails across there, and especially when Biden and Trump are having a bit of a who's the boss call, and there's no real decision makers there, and we can end up with Taiwan occupied by mainland Chinese forces in a 24-hour period. And once they're in Taiwan, there would be no moving them out. Admittedly, Taiwan is acknowledged as a Chinese territory. It just has an independent rule at the moment. Now, China's escalated, and you can have a read about this. Just Google it very quickly. But China's got current bans on coal, lobsters, wine. This is Australian wine, wheat, timber from Queensland, and sanctions are expected on barley, beef, and cotton. So our biggest trading partner is in fact closing the door on Australian imports. One of the big ones, coal. They've got 7 million tonnes of coal at port in China. The Chinese government has said you cannot unload, and they've got more than 23 million tonnes or something of coal en route to China, that China has issued a warning that it will not be permitted to be unloaded in Chinese ports. So this is fairly abrupt. It's an escalation. It's a response from Australia participating in the Quad exercises, among other things. And our relationship with our biggest trading partner is deteriorating. Interestingly for me, there's really very little in the press about it. We get more information about what's going on in rural Melbourne and what's happening with COVID and that than we do about the potential for major restrictions for Australian products in China, which of course overbalance our trade substantially. That's the bad news. Now we're going to try and, despite all this, as long as they don't invade Taiwan, we're going to try and make some money out of the whole scenario. This is a seasonal map of the Chinese A50 index. Now, just like other indexes, the China A50 index is tradable, and we can see that if it was just a flat line, it would mean this is a measure of the last 3 years of seasonal movements, and they're adjusted, worked out, and if there was no seasonal relationship, there would just be a flat line or a wavy line, right? And it would just go like that, or have a flat component in it, and that would be where there's no correlation. However, we see that over the last 3 years, there's a period where the market tends to rise, the market tends to spike up, it rises again, slumps down, rises up, and slumps back down, and then we have a bit of a rise here in about September, and then we bump up a little bit in November, and then we have here, you can see a flat spot. There's no seasonal correlation there. There's no pattern period in this period. It's just about to come on shortly, and then after that we have a very strong seasonal rise in the market. Now up here, this I caught this accidentally, but this is our predictive tool giving a percentage directional outcome. At the moment, that's an 83% chance of going down in the next couple of days. So that's very interesting. That takes into account some of this seasonal scenario. And so in the next 24 to 48 hours, there's a potential for the Chinese market to come down. We're not going to trade that. That's a very short-term scenario. What we're waiting for is this no pattern period, and that we don't think is going to occur this year because of the election. We think that we're actually going to have a strong pattern here, and the pattern will be up. Now, just have a look at the US election in 2016, and we can see here, despite the fact that we would say China and Trump don't get on, here's China rallying after the US election, right? And it has that solid bump in it. The 2012 one, I haven't got it here, and that does a very similar thing. The China A50 in 2017, just to show you that it's not just an election year, there is 2017 and here 2019, we get this rise after the first week of November into the first week of December. And the magnitude of it is substantial. So we're expecting about 750 points this year from the Chinese market. And if we say it's trading at 16,000 points now, and we say in a couple of days it's trading at 16,000 points, that makes it about 16,750. Now we can trade the Chinese A50 index. Once again, we can use City Index AT Pro platform, which is my preferred platform. And here, the Chinese A50, I'm going to divide my account by 5,000. So we're going to trade it not at a very high level. It's a very soft trade, but we're trading for big points. Now, we've got to remember the China A50 trades in US dollars per point. So one contract will deliver 750 US dollars on a $10,000 account. I have two contracts in a $10,000 account. It will trade $1,500 US, which is more than $2,000 Australian, which is a 20% return on your account over the space of about 2 weeks. Now, tomorrow we're going to take a position at 2:30, and we're going to trade with a 750 point limit, and we're going to do a 750 point trail. There's some really, really important things that you need to know about this trade. First off, the Chinese market closes and no derivatives operate. So unlike other indexes, when the market's closed, no stop works. And in City Index, there's no guaranteed stop for the China A50. Once it closes, you carry an unlimited exposure to the marketplace. And so when I trade tomorrow, my exposure will be technically greater than 750 points. So a major event like a nuclear detonation, I could see my entire account vaporize. If the market's trading at 16,000, something happens and it's a massive event, tidal wave in Japan, something like that, and nuclear detonation between Taiwan and China, the market opens at 10,000 points and my account will wear that loss, right? And technically, you're liable for that loss. So this is unlike the other trades. It's deemed highly risky, and one of the things I know a couple of clients, Trading Tiger clients, have talked to me, and one of the ways you can limit some of your risk is that you can actually, just take some money out of your account. We're sitting in with a significant amount of profit at the moment from the last 5 or 6 trades, and we can take some of that profit out and reduce the balance of our account, and at least we are trying to limit our exposure. If you read the PDS from City Index, it says reaching a zero balance doesn't limit your liability, but there's also the forcible closeout rule. Okay. The trade expires on Friday, the 11th of December. So you're sitting in the trade for a fair while. I suspect it'll be over a fair bit quicker than that. The US election will see it rocket through. And the potential for it is still quite good, even with the high risk. If you're risk averse, don't do it. If you've done some of these trades and you've got plenty of profit, you go, that's enough. There's other things coming up. Now, that's all we've got for today. You can follow me on Twitter. We've got stock tips, market tips. I call the RBA every Tuesday, first Tuesday of every month, and pat on the back. I got it right again yesterday. Said yes, there'll be an interest rate cut. I tipped for 0%, and it got cut to 0.1%. I'm not sure that the RBA rate cut is really a stimulus at this point. I regard it as a continuing policy for the Reserve Bank of the world reserve banks, to move towards zero interest rate by 2023, which is what they've said. But anyway, Global Reporter, we've had an audit. That will be available on the website shortly. 2,200% return for the year, and a 63% accuracy. That's despite all our stops being hit when the COVID struck, and we had a big field of March reds where they all stopped out, and even then we've managed to have a good return. Day trading, our day trading account, you can have a look at all the day trades we've done this year. That starts with $10,000 every year in January, and the current balance just around $60,000 there. Now, just take a couple of seconds to talk about Trading Tigers. If you've been following the trades that we've done over the last week, you're participating in Trading Tigers trades based on behavioural mechanics, how a market behaves under a stressed or corralled situation, and we're trading market psychology, where we're looking at what way the buyers will go, what way the sellers are going, and we're solving the equation buyers versus sellers, etc. It's an approach that is different to fundamentals, it's different to technicals, and it's certainly completely different to computer-based trading, because we're actually not trading a market at all. We're trading the people who trade the market, and we're trading their behavior. Now, people talk to me about computer trading systems all the time, and I was just evaluating for a company. I do corporate advice, and I've got a corporate client who came to me yesterday, said, look, this is an FX trading system, and it's yielding 16% per month, and it's doing very well, etc., etc. And I had a look at it, and it was doing somewhere between 1,000 and 2,000 trades a month. All right, and that typifies computer trading systems. They trade for a very short time. They don't have a program style of understanding people and people's behavior, but they are very good as turbocharged filing cabinets. They see something, they go in, they're out, in, out, in, out. And if they're very quick and very capable, obviously this one is, and it's making, even though it's doing more than 1,000 trades every month, it's making enough to actually make a profit on the thing at about 16%. Whether it can keep doing that or not, whether that's sustainable or not, I have further analysis to do on that. But certainly it was an interesting concept, but not what we're doing here. We're taking positions for a long time, like our run down on the S&P 500, our reversal on the S&P 500, and there was no way any sort of computer trading could do that, because it's in, out, in, out, in, out. There's no way that technical systems could do that, because by definition, they're trend following. And there's no way that you could do it from a fundamental analysis, because you'd be measuring the performance of stocks and returns and that would have put you long in the market. The good news and the good performance through COVID and everything would have had you going buying stocks before the election, but we know not to do that. That's Trading Tigers, that style of trading. If you enjoyed that style of trading, then you can join the Trading Tigers program, and it's an educational program. It's limited numbers. We can't obviously have 1,000 Trading Tigers out there putting money into the market on the same trades. So positions are limited. It's an education program. You do the trades. I tell you what I'm going to do for the trades. It's up to you as to what you do for the trades. And then I do the trade. I tell you well in advance what I'm going to do. And I can tell you right now, I'll be long for Melbourne Cup next year, like I was this year, like I was last year, like I was the year before. The timing for that will vary with year to year, with what week we're in, where does the last Friday of October fall, etc., etc. But the timing's different, but as far as go long for Melbourne Cup, I do that every year. And there's more than 20 of those style of trades in the year, and we do things like gold. If you've enjoyed the gold trade, that's been sensational. The run down was great. We didn't get to do that because we didn't put it on Facebook. You got the run up. We've had the run up. That's just about to end if it hasn't ended already while I'm talking here. And then there's more than 5 gold trades that occur at the same time every year. They're quite amazing. So if you like that style of trading, then you can think about joining Tigers, and you can contact Trish at Investor Centre about joining Trading Tigers. The price for 2021 is increasing, and there's only limited positions. Now, keep an eye on the Investor Centre Facebook and Twitter. I'm going to do a live question and answer session sometime in the next week or two.